Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Tuesday, September the 21st, 2010, and like we do every night, it's time to check out the markets. Where to begin? Where to begin? Let me tell you what's going on here. Here's your flash crash situation, all right, prior to the flash crash in the U.S. Looking at the FTSE here. This is a 6-month chart, each candlestick being 1 day. We're monitoring the FTSE because we've been following these guys to do this crash and do the rebound back to the double top situation that we're getting here. And it's important to note, track these guys because they're ahead of the U.S. markets right now. They're actually further extended and so forth and so on. So we want to watch these guys. We're looking for that peak, and that's an important indicator that we're looking for. And we got it a couple days ago. All right there, you've got that inverted hammer, big old nasty sell signal right there. And those guys don't go away. All right, you've got another one right there on today's activity. Smaller. This one's more trustworthy, but in any event, they're both telling you the same thing, so we don't have to worry about all that. The main thing here, once these signals are in place, you know something. First off, you had a rally back here coming up for a while, then you got shot down because of all that news, the fundamental data out of Europe and so forth and so on, that they're possibly slowing down, going back into recession. You have Greece, you have Spain, you have Portugal, etc., 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 all that news. And then you got down here and you got to conclude one of two things. Either A, the markets were unjustly oversold and need to be bought up because it was a buying opportunity, and then you would hope for this to happen. All right. Now, another strategy there is to believe that this was the peak, all right, which is my personal strategy, and down she goes. It was not unjustly sold off. It was sold off for all the right reasons, and it was done so on strong volume, which is important. If it's a fake sell-off, it would be low volume, and that's not the case. So my argument is sound, and the bulls are, again, wrong. Now we get this bounce up here, okay? That's fine. We now need to know, is that sell pressure still there? And according to these indicators, this right here, this sell signal, and this one here, it is. And in fact, it's stronger than it was back here. So I would definitely be shorting this level, period. There's no question about that. You are overbought the slow stotch above the 80 line, which is where you're going to be looking for your short opportunities if you're in an overall down market, which is what you are in, confirmed by trend and volume. A lot of guys are just looking at this point right here on that low volume move to the upside and they're saying, aha, the trend has reversed. This is a counter trend, my friends, not a true sustainable rally. So the end result will be a fill and back down here on strong volume. Okay. Now it should be noted, you never want to take one person's opinion over another. That doesn't make any sense. So my opinion is that you need to be shorting this rally. This is a backed up opinion by Kass as well as by Prechter. So you can take those three guys, and myself including that three guys, and say, wait a minute, these guys are pretty accurate and they're all telling us the same thing. Or you could just look at the chart for yourself, scroll on down, and say, hey, wait, what a second. What is that? Is that the RSI? Yes. Okay, what is it saying? Anything at or above 70 is extreme overbought, and you're bouncing off that line. Looks like you just need to say, hey, wait a minute, all the signs are telling us the same thing. This market's not going to be able to hold this rally. We need to short it. Quick look here at the Hang Seng Index. You'll notice dark cloud cover formation here today. This is not a bullish candlestick formation in any way, shape, or form. You're starting to find that sell pressure, that resistance. Okay, it makes perfect sense as your entire rally here is based on a bearish set of divergences, which means you want to let the market bounce and short it. Yeah. Okay. Confirmed by the overbought condition of the slow stotch above the 80 line, right? Everything's in line there. You're also trading up near the upper Bollinger Band line, and you got resistance from back here prior to the flash crash level. Makes perfect sense to me. Quick look at the RSI for the same index, all right, 7084, all right, above the 70 line is extreme overbought. When the RSI tells you you're overbought, you are more overbought than when the slow stotch tells it to you. This is an extreme indicator. It only registers on occasion, very few times in a 6-month period. You'll notice it's only been up there twice in this particular case, all right, so in the past 6 months. So it's definitely something to keep an eye on there. Basically, all your world indexes are showing the same way, extreme overbought. And you'll notice you've already started to roll over, which is one of the signs we told you was the last one you wanted to wait for. And there it is. Okay, so when you're seeing the MACD histogram start to fade there, you know momentum is fading. You also notice a divergence between these items here. All signs point down, except for price activity, which is lying to you, so short it. Here we are looking at the Nasdaq. Now, we've been monitoring this one for a while. She's had, I think, 9 consecutive days. The upside today was the first one back to the downside. Spinning top formation, nothing bullish about that. And you'll notice he was pretty good sales volume. We'll look at that in a minute. On the day, again, over the overbought condition of the 80 line, which is where you want to be looking for your short opportunities. It makes perfect sense to me. You do have a gap here, and without resistance, you can still fight to the upside. But it's a long shot, and there's no signals supporting this other than just plain momentum driving a little bit higher. That can always happen. You look for situations that are extremely overextended. You look for those that are bad quality moves like we have here with this big move to the upside and 6 gaps below. 1, 2, 3, 4, 5, 6, and there's one way back there as well. It makes 7. So you got all kinds of really nasty signs telling you this is not going to hold. On top of that, we've gone back last week and we'll show it to you later this week again. You also have major divergences telling you price activity is going to end up going lower than the July low. So all this information is definitely something you need to take into account and say, wait a minute, what are the odds telling me? What are the numbers telling me? First off, this guy here is telling you, 1, be a bear. This guy here with the overextension, 2, be a bear. You're trading at the upper Bollinger Band line. You've got 7 gaps below. Exhaustion gaps get filled. That's 7 of them. Okay, that's a lot. In all of my trading, I've never seen that go by. Just no big deal. We're just going to move on. It's a rule for technical analysts because it applies every single time. These guys get filled, and that's just something you got to count on. So that's another reason to be a bear. All right, it's at least 3 for you. All right, you've also got the bearish divergence. That's 4, which means you're going to be taking out this low point. You also notice an increase in sell volume. The very first day of any selling, and we get a nice little move on the sell side. We'll talk about that in a bit. Also, you'll notice the histogram starting to roll over here, and you're bouncing off of that extreme overbought condition of the 70 line, which means all signs point south, down, sell, short, that kind of thing, okay? Unless you're feeling lunky. Are you, punk? No, we're going to short this. That's all we're going to do, okay? Quick look here at the Russell. All these indexes are looking exactly the same, though the Russell's showing more weakness. You'll notice here above the 80 line, which tells you to be looking for short opportunities, you have made a move higher than this previous high here, all right, the 672 level. You've hit 672.38, which is a couple pennies higher than this level right here. So that is one little positive note, I suppose, but you got all these gaps that got to get filled, and you still haven't broken out of this level either. So it's really, really weak on this chart compared to the Dow Jones, the S&P, and so forth and so on. So definitely be keeping an eye on this guy. I've seen a lot of weakness here. We talk about this a lot in our live trading course. Also, again, this divergence, bearish divergence, telling you you're going to break down anyway. All you want to be doing is timing your way into the short, which we also recommend you do it in a leg-in manner so you don't get surprised. You go in and you get in here, and you wait a couple days, it goes higher, you find another spot to get in. A couple days it goes higher, fine, you find another spot to go in. When the thing happens and she breaks apart, you're making tons of money. That's how that game's played, okay? Quick look here at the S&P 500. You'll notice again 1, 2, 3, 4, 5 gaps below you. Bearish divergences on the longer term charts, and you're getting that spinning top signal. So you can still press to the upside, but you're peaking. That's what you're looking for. You can look for better timing into your short position, which you definitely do not want to be a bull. Think about this. Yesterday the market rallied a good Dow Jones was up 140 points, and you had a lot of people thinking this is it, this is the rally of all rallies, and yet everybody that I respect as a technical analyst comes out and said no on this one. This breakout, you want to short it because it's not a good quality move to the upside. It's a low volume rally. It's got all the telltale signs of a fool's rally. If you go to our free website at perfectstockalert.com, you can check out the chart school, and we've got a video in there discussing what a fool's rally looks like, and it's all the telltale signs are in play right here, so you don't want to miss that, okay? Very clearly defined, and that's exactly what you've got, and every smart trader I know is spotting it for that. Also, you'll notice the S&P this week has been bouncing off that overbought condition of the RSI 70 line. So again, all market conditions are showing extreme overbought conditions. Okay, quick look here at the Dow Jones Industrial Average. You'll notice the shooting star pattern right there. Not the strongest I've ever seen, but you can keep pressing higher, but the signs are already there telling you this is a short. You need to be looking for when you're getting sell signals, you need to be looking for short opportunities, not long opportunities. No matter what anyone else tells you, you've seen this before. Da, da, da. You all saw one back here on this day that we said short it. Didn't matter what it did, it was going to fail. Yeah, same situation here. You're getting a double top, just like we showed you on the FTSE, okay? Above the 80 line on the slow stocks, telling you should be looking for your short entry opportunities here. That's pretty easy to spot. You'll also notice on the RSI you are bouncing off that overbought condition of the 70 line. Again, currently at 68.20. Okay, one of the telltale tools we use in our analysis is always comparing our analysis against the VIX. The VIX should be confirming our analysis. In short, whatever the market's saying, the VIX should be saying the opposite. If the markets are bearish, the VIX should be bullish, and that's exactly what you have, and that growth, it is growing stronger and stronger. Notice here, you're now hitting the 20 line on the slow stotch. Okay, we're bouncing back up above that line, probably be there tomorrow. Keep that in mind. These are all bullish signs. You've come down here, you hit a low, bounced above the 20, back down, made a higher low, and now going back above the 20 would confirm that you are seeing an uptrend here. At the same time, you were seeing a downtrend here. That was a situation where you have a bullish divergence. You want to be a buyer of this move, not a seller, and that would be telling you to go short the overall markets and long the VIX. You'll also notice this is confirmed on both the RSI right here, okay, and right here, all right, and the MACD here and here, okay, la-di-da, like that. All right, everything points up, okay, awesome, except for the overall markets, they all point down, right? Okay, if you follow us on Facebook, you got the news this morning from Prechter telling everybody to short this bounce. If you did not see that, you can follow us on Facebook and get that news. Also, I'd like to point out a couple of things. All this buy activity you've been seeing has been on the hope of the Fed, what the Fed's going to do for the market and how it's going to save bulls and champagne's going to fall from heaven and they will never cry again and all that stuff. You got that news today and the Fed didn't do a darn thing. Nothing. He said he would if it got worse, which of course he's going to do something if it gets worse, but it's not going to change anything. Remember, in 08, they came out and said, we are banning shorts. Once you've done that, you've done everything you could possibly do. It turned the market to the upside for a day. After that, you sold off, period. They can't stop this, all right? The problem is not changing. It's not a different problem we're seeing in Europe. It's a growing problem that we've been seeing, okay? You went from subprime companies to now subprime countries. It's just getting really, really bad, okay? So all signs that they're telling you that the recession's over, blah, 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 think it through. You've got an increase of foreclosures, okay? They're spiking. You've got an increase of banks going under. That's odd. And you have an increase in unemployment. That's odd. All these things tell you it's getting worse than it was in 08, so why is the recession over? I'm just not seeing it, all right? Pretty simple. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. Also, please subscribe to our YouTube channel. We'd appreciate that support. And speaking of which, yesterday we broke all traffic records on our website again. So thank you very much. We apparently have been doing that every week consistently. So I want to thank you guys for your support of that. A quick look at our disclaimer. The disclaimer, read it and weep. All right, you can register for next month's live trading course today. Anyone who does that gets the rest of this month absolutely free. I'll see you all there. God bless. Take care. Trade smart.